So that's why I'm telling you, don't do that. Just observe it. I have no problem sitting out here in front of you, like yesterday, walking you through why I don't trade those days. Because yes, you saw me pick one good move during the move or the market hours after 9:30 to lunchtime or whatever. One good move. That was it. Everything else wasn't doing anything for me. So it's stuck in the mud. So if I know the market is likely to consolidate, gyrate around in a small, meaningless, aimless range, like a sailboat without a rudder, why would you want to go out there and try to show yourself exactly what you already knew in your heart of hearts? You're not going to be able to make money in that particular environment or that market climate because it's waiting for what? The news to drop in less than 7 minutes from now. And then it creates this excitement, this carnival ride. And traders will be out here waiting to do something because there's movement on the charts. So, like a hungry leopard out there in the plains, they're going to be sitting waiting for movement, and the eye catches movement, and then boom, they pounce on it. Well, that's what this event does. Non-farm payroll, NFP in short, I call it not for professionals. Okay. And I wish I could remember who I got that from because it's not original to me, but it stuck with me. Not for professionals was a wonderful analogy for non-farm payroll because while there generally is a lot of excitement that comes out during that time at 8:30 on the first Friday of each month, it's not advised for you as a developing trader and or someone that's profitable. Why would you gamble? Because that's exactly what this is. It's a gamble. You're asking the market, you're daring the market to take money from you. That's what you're doing. You're saying here's the likelihood of me likely losing because it's wild, it's volatile. And sometimes it's not volatile. Sometimes it's a lackluster event. And still you can end up losing money because it doesn't go where you want it to go and just drifts sideways or doesn't do anything. And you get squeezed out of it and there it is. So there's not what it used to be in the 90s and 80s. It used to be a pretty consistent outcome to non-farm payroll. And that's why it was a steady draw for people to want to do it. And then as electronic trading became a thing, a lot more volatility came in, which brought in more what? Retail interest. This is the day that everybody makes money. No, that's the day everybody loses money. I'm talking collectively as a retail trader, new startup, someone with less experience. Now, I know you're probably going to list 10 people that you see on Instagram or Facebook that show you after the fact, this is what they made with their MT4 accounts. That's forget all that. Okay. We're in the really real world here. I'm ICT and I'm telling you, I don't know what NFP is going to do. I don't know. So if I don't know and I don't have a statistical probability that would consistently deliver an edge, why on earth would I trade it? That goes against the whole reason why we are doing anything in these marketplaces, right? We're trying to trade in an environment that is controlling risk and has the opportunity and probabilities for us to succeed. Not a guarantee because none of us is guaranteed. So um, in the event that the market was to really unravel, okay, because we're in that daily range, consolidation, trading range, or whatever I mentioned the last time we were on YouTube. Until we leave that, we're going to see really just choppy, aimless market, price action. It's not going to do very much at all. So, and then again, this is the reason why I don't like trading in January. I wait till the first Tuesday of February, let the first month get priced in by everybody else out there trying to do something, with their New Year's resolution. They're going to make money. They're going to quit their job in 90 days. All these things, these unrealistic goals and resolutions as a trader. And they're all going to do what? Converge on a day like today because they have been trained to see social media influencers tell them, I made this much money. I caught the bag on NFP. And you don't know if those trades are real. You don't know if that's a fake MT4 server. You don't know if that is a account that's even yours. You didn't see them execute. You didn't see them show you beforehand why it should do what it should be doing. I've co-signed, I've said that I believe that 3814 will be tagged. I believe also if it gets animated to the downside, 3804.5, which is Wednesday, December 28th of 2022's low. Why would I go into that expectation? Well, I think that it's going to want to try to lull traders into thinking it's going to go down a lot. Go down there and then get them caught short. And then they'll probably pull it back up in the middle of the consolidation on that daily range or that trading range on the daily chart. So it's a matter of whipsaw price action. And it's not altogether, predictable. So I like to have things that are very, very problematic for a retail trader, but advantageous for me. I want to see where there's an arm wrestling match between retail logic and the concepts that I teach you. And there is no consistent delivery of that I have been able to measure and see in non-farm payroll. So if you were to, I guess, poll or ask or sit down and interview the most successful financial traders in the world, if they were honest, they would tell you this right here, you don't want to do this. You don't want to trade in the next minute or so. So you want to put your ESH 2023 chart on a 5-minute chart. And you're about to see the carnage here in less than 30 seconds. Now, if I were making the market, I would run it up to about 38.38, clear up all the buy side, and then sink it down to 38.14 and maybe rip it to 38.04 even. And then that'd be it. And then the rest of the day, do nothing, just consolidate. I'm not saying that's what's going to happen. Okay. It's better for it not to happen so that way you can see, okay, now I understand why ICT doesn't do that. All right, we went above to 38.40. And then off to the races it goes. There you go. That's exactly why I don't trade non-farm payroll. That was honest. That was 100% real time with you. And because I can't see what it's likely to do or what it's likely to do with any measurable precision, I can't touch it. I can't play in it. I can't do anything with it. So looking at that, why would you be convinced that this is a day where you want to be trading? It's like a CPI number for me. And you watch me do it twice, give you my opinion about what I think it might do, because I want to co-sign. I want to show you this is my opinion. This is not me trading. This is not me putting on a trade. This is me sharing the logic as to why I avoid doing certain things. Because if you're trying to learn how to do something and there is a outcome that's positive and there's an outcome that's negative, if someone knows what they're doing, they should at least know where the likelihood of quicksand, okay, or things that's going to cause you harm, loss. Where's that likely to manifest itself? If it's something that reoccurs over and over and over again, there is merit to understanding how you can avoid that. And I've learned very painfully, losing lots of money, lots of accounts, okay? This particular day and the day leading into it were the main culprits for it. So when I teach my students, a lot of casual readers or viewers will come to me and they'll say, oh yeah, ICT doesn't trade on non-farm payroll. And look at this, I caught this move, okay? I'm not impressed by that. It doesn't sway me. But unfortunately, other new startups see those opinions being shared and they think, oh, well, I'll adopt that mindset because they probably watch the videos I don't want to watch. So if they came to that conclusion, then therefore it must have merit to it. So I'll just take their opinion and adopt it and not be an independent thinker at all and look into the logic as to why ICT says this or doesn't do that. So for the benefit of those individuals that are just coming to my channel, you can see with great deal of clarity why I teach in my lectures year after year after year. And when I'm on Twitter, I tweet all the time, retail traders will be regretful moments from now when 8:30 news driver comes out. Okay, so, I mean, can you afford in 1 or 2 minutes to be offside, in other words, on the other side of the market against where the market's going? Can you afford to be in a move like that goes against you that quickly? And your stop loss doesn't protect you like it would normally would because it's going to gap through. I've learned that lesson painfully, and it's not fun. If you were to pull up a 5-second chart at 8:30 on the 5-second chart, the high comes in at 38.40 and a quarter. Then the next opening candle opens 10 handles higher, all in less than a minute, less than 30 seconds. It snaps there, just like that. Now, my question to you is, do you really believe when you see these people out there putting 200 lots, 100 lots, 50 lots, that they're really going to risk that on their account and show you after the fact that this is what they did with their little MT4 trade history? That is such a load of crap, because frankly, they would be doing it live. If you were a baller like that, you would be doing it live. You would show the world that you were doing that beforehand, explain that you were doing it, and then do it and be consistent about it. But unfortunately, I have never seen someone trade non-farm payroll consistently profitable. So again, it gets back to, what's the likelihood of you succeeding in something? Do you want to take the highest degree of difficulty in reaching success? Or do you want to say, you know what? This makes perfect sense as to why we should not be doing it, that we should not be worrying about it. And in fact, have a long weekend the first week of every month. On Wednesday, the Wednesday prior to non-farm payroll, you can see it, it's the first Friday generally of every month. So if you know that that's the likelihood for you to get caught up in something that's not probable, the likelihood of you losing money, being frustrated because it doesn't do what you would expect it to do, there's no rhyme or reason, no logic behind what it's doing. It's causing chaos. It creates, well, movement. And movement causes what? Sentiment to shift. So that shift in sentiment, or establishing a bias, then presents at a later time opportunities for professionals. Right now, look what it's done. One quick sudden movement, 50 handles or less, and now we're just trading right between 38.50 and 38.40. So what was the reason to be long? And why would you trust it to be long and not go down? See, it's absolutely 100% casino time. So to protect my students and to be 100% transparent, I always tell you where my weaknesses are. I have no shame in that. You have to be honest with yourself as you're developing. And if you discover where you have a specific weakness, and if you can't correct it, if you can't combat it, if there's no resolution to it, if there's no way of coping with it so that way it doesn't hurt as much, isn't it better for you to take those precautions? I mean, I don't know where you're from and what school of thought you subscribe to, but I believe that this is the hardest business to engage in because there's so much psychology behind it. And if you go into the marketplace expecting it to just lay gold at your feet because you participated, like it's a participation award. Yeah, that's unfortunately the mindset of this generation. You think just because you open up an account and you watched people's videos and you studied that it should just fall in your lap, and it doesn't work that way, especially on event days like this or CPI. Even people that know how to trade, and I'm not just saying it about myself, there's other traders that know how to trade, even trade outside of what I teach, and they still can't make money trading CPI or non-farm payroll Fridays. They won't be this candid about it because it would mar their image. I don't care about image. I don't care about it because me being viewed or loved or hated has nothing to do with your bottom line. That's the only thing I care about. Do my students learn properly? Am I providing the information honestly? And that way you can see it. I'm executing based on the logic, and I'm also teaching you exactly when I'm not expecting it to work. It's not the algorithms broke. It's not the algorithm stopped working. They're not changing the algorithm. It's just these are days that there's no rhyme or reason for you to be expecting precision. You can't do it. I can probably list 2 or 3 times where the market went to a target in 30 years that I had predetermined before 8:30 would start. And honestly, I think maybe one of them was made public, and that was it. Then you would think if there was something to this day that I had an advantage over, wouldn't I like to be flexing it and showing you publicly? Because I would. I would. That's my personality. I would do it. Just like I showed the precision and everything else. I caught the big move with a lot of ticks or handles earlier in the week. And that's how I train my students. Look when the moves are going to be logical and where it's likely to form. And when you get it, you stop, you close up shop, and don't worry about the rest of the week. Let the retail people trade this. Let them wreck themselves. Let them get mad. Let them get all worked up in a frenzy. You're on an extended weekend every first week of the month. This is your protocol. This is exactly how I teach my students, okay? You are welcome to trade on Monday. You're welcome to trade on Tuesday. London session, New York session, PM session in the afternoon for stock indices. This goes for Forex and futures. But now here's where the deviants come into the conversation. I like ICT. I like some of his stuff, but I'm going to cherry pick this part and remove it from me because I'm going to be the exception of the rule. Don't do this. Here's where you need to listen. You young folks, okay, especially the men. Do not listen. Do not trade after the morning session in Wednesday. So you're welcome to trade up to 10 o'clock, 11 o'clock if you're doing stock indices. But at 11 o'clock, be done. Don't touch it in the afternoon. You'll regret it. Don't touch it on Thursday. You'll regret it. And certainly don't trade on non-farm payroll Fridays, because chances are you're probably going to be offside, which means you're on the wrong side of the marketplace, and it's going to rip against you, and your stop loss won't be respected. How's that possible, ICT? How I had my stop loss in there. My broker has to get me out at the stop. No, your broker doesn't have to do that. Okay, because if your stop loss is, for instance, at 38.41 and a half, okay, you're getting filled at 38.50 or higher. That's slippage. Welcome to the real world. Okay, there's no slippage in demo. In paper trading, there's no slippage, and that's why these guys will put that they have 50 contracts on moves like this, and they're not going to tell you what's going to happen before it happens. They're not going to co-sign what they believe before it happens. They're going to show you the history after it happens. That doesn't help you. That's an ego stroking for them. I'm trying to absolutely teach you. Okay, I'm pouring myself out this year. I'm doing everything I can to make you understand why I say the things I say, how I do it, why I don't try to do it on other days. If you want to try to trade like me and learn how to do things that I do with these concepts, it makes sense for you to do what? Subscribe to everything, because every little thing has its place in the way I think about the marketplace. You can't, honestly, in my opinion, you can't come in and just cherry pick certain things that you like me saying. Oh, that sounds cool. But then when I get to the real meat and potatoes of it all, which is these things right here, how do you avoid losing money? Nobody writes books about that.